Hello and welcome to another interesting episode of Islamic Finance Weekly, where we discuss the key developments in the industry and opportunities for Nigeria to tap into. On this edition, I have with me Mr. Shuaib Audu, the Executive Director of Stanbic IBTC Asset Management Limited. It is a great pleasure to have you on this program.
Thank you, Bukola. It's my pleasure to have you speaking with me today.
Thank you very much. As an expert, what asset class or combination of classes appear ready to bear the burden of the weak Nigerian economy?
Well, that's a very interesting question. First of all, the Nigerian economy is going through very interesting and tough times. The GDP for 2019 came out recently. It closed at 2.27%. Really, our population growth rate is around 3%, so we should be growing much faster than 2.5%. We think that for Nigeria to lift, 100 million people out of poverty, like the federal government wants to do, then we should really be growing at, 6-7% continuously, and even moving closer to double-digit GDP growth rates. In terms of inflation, we've also seen inflation close to 12%. Now, that is on a relatively high basis. Inflation should be trending closer to single digits. Now, what we've seen is that the fear of low GDP growth, high inflation, and the possibility or the risk of a potential exchange rate devaluation is causing a lot of concerns for investors. So in January, we saw the market race up to around 10% or so in terms of returns, but we've seen that race back downwards to around minus 0.2 or so percent as at yesterday. And it's because of a lot of these concerns that we're seeing in the market. So investors are very jittery.
Thank you very much for that. So where do you think investors can place their money?
I think, traditionally and historically, investors have had low risk appetite. What I mean is that they are not prepared to take significant amount of risk. If you look at the global financial crisis that happened in 2007, 2008, investors lost, their shit. That's what we generally call it, where investors lose their shit, and they've lost a lot of money in the market. So they've learned their lessons, and they prefer, fixed income securities generally. So treasury bills, bonds, money market placements, fixed deposits, and the likes. Real estate investments have also had an opening, where more sophisticated and high net worth individuals and corporates have sort of participated in that market, but we've seen a reduction because of the liquidity concerns. Real estate has really taken a beating in the more recent past. We've seen dividend yields or rental yields come down significantly to below 5%, and generally across board. Particularly, on the commercial real estate, but also on the residential side. We've seen asset classes underperform generally. So, investors still have appetite for fixed income securities because they would rather see, return of principal. That's their first concern before they worry about return on principal. What that means is that if I give you 100 naira, I want to see my 100 naira back before you give me 10% return on that. If you put 100 naira in the equity market, you could end up with 80 naira, and a lot of investors don't want to see that. So those are the sort of concerns that we've seen. But the appetite is still in the fixed income. It's still in the fixed income market, correct?
So that was insightful. So fixed income funds used to be the favorite money market opportunity until Q4 2019. So what will you say about fixed income investment in 2020?
That's a very interesting perspective. What we saw in the last quarter of 2019 is that CBN came up with very draconian policies in the fixed income market, where they prevented, corporates and institutional investors from participating in OMO, open market operations, and they restricted it to just foreign investors and banks. So what we've seen is that a lot of the liquidity that has been in the institutional investor market. So for example, PFAs, pension fund administrators, the total assets under management is about 10 trillion.
10 trillion.
Yes, 10 trillion naira, which is about, close to 30 billion US dollars. Now, a lot of those funds some of those funds were invested in the OMO market. Now, CBN has prevented PFAs as well as asset managers and insurance companies and other institutional investors from tapping into that market. So what we see is that there has been a decline in yields across board because, what we're seeing is demand and supply at play. So a lot of this money that is available in the institutional investor space is purchasing a limited number of securities. So what has happened is that the price of those securities and the yields on those securities have come down drastically. In addition to that, over and above that, when you have other policies like loan to deposit ratio, where CBN has set it at 65%, it means that if banks are taking deposits on their balance sheet, then they have to lend that money to investors. And banks are not able to create or to expand their risk assets and their risky books as easily as they are able to take deposits. So what we're seeing is that, interest rates across banks, have fallen in some cases to as low as 0.5% or 1%. And even in some rare cases, you see banks that don't want money because CBN has told them that once you take this money, you have to be able to unlend it. Otherwise, you're going to get slammed, you're going to get penalized. Punitive measures are going to be taken. So because of all these factors, we've seen interest rates in the fixed income space drop drastically.
Thank you very much. So Islamic non-interest finance has become an appealing, increasingly segment of the financial market. What are your opinions about this new asset opportunity?
I think that the Islamic finance space, non-interest finance space, is a huge market, and we've done some research, even in the Stanbic IBTC group. We've done some research, expansive research in the non-interest banking space. So if you look at the Nigeria population, over 100 million people are Muslims. Now, research has shown that around 51% of the populations are Muslim. Now, PENCOM, the National Pension Commission, which regulates PFAs, have come up with what we call a Fund 6. It's called Non-Interest Fund, i.e. Shariah Compliant Investment Funds. And it allows the PFA industry to invest up to 20% of their assets under management in the non-interest
market.
Yes, non-interest market space. Now, I gave the number as being 10 trillion in terms of the total assets under management by pension fund administrators in Nigeria, which is the largest pool of institutional investors in the country, in West Africa. Now, what that means is that potentially you could have up to 2 trillion naira invested in the non-interest Islamic finance space. I think this is a big window of opportunity. CBN has also gone ahead to license about 23 banks to be able to participate in the non-interest window, non-interest banking window, which is a tremendously, a tremendous effort, and it's tremendously impressive in terms of trying to develop that market and develop that space. So we think that the opportunity is huge. We are creating ways to tap into it. We're an end-to-end financial solutions provider, and we want to cater to investors and clients and customers within the Stanbic IBTC group to meet whatever risk profile and investment appetite they have, whether is conventional investments or non-conventional investments like the non-interest window. We're able to provide those solutions to cater to those needs.
So what can you say are the challenges facing non-interest finance in Nigeria?
I think some of the major challenges will be challenge of understanding. I remember when the first Sukuk note was issued. Yes, 2017. The federal government was accused of trying to Islamize Nigeria. So I think when there's a lack of understanding, then some of those challenges presents themselves, because those types of instruments are issued, the Sukuk bonds that was issued by the federal government are asset-based, asset-backed types of investments, so that they are designated for a particular purpose. And the largest financial center for non-interest banking in Europe is in the UK. And if you have a Western system of that sort, such as the United Kingdom, having the largest market for sukuks and non-interest window, then that it has nothing to do with trying to Islamize a country or something like that. So I think those are some of the key challenges: a lack of understanding of the products. And the other interesting challenge that we see is in terms of the developments of the investable products. And because it's a relatively new sector in the Nigerian economy, a lot of products have not been developed up to the extent that the market for those products and the tradability of those products are very deep. So, if you look at, investments such as Ijara or Mudarabaha, or yes, all those types of investments and models. What we see is that there are some that are being issued, but the market is not as deep. So we need to deepen that market.
So how do we think we can overcome these challenges?
I think that investor education is very key. I think the session that we're having now is critical. What we've done within the Stanbic IBTC group is to introduce within the asset management business, to introduce, we've introduced some non-interest compliant funds. So we've introduced, the Imaan fund, which is an equity fund. We've also introduced a fixed income Shariah Compliant fund as well. And, the success story has been, very clear for everyone to see.
In an inflationary environment, would you say non-interest instruments are competitive?
The non-interest instruments are still competitive. That's the simple answer, even in an inflationary environment. Like I mentioned earlier, inflation is at 12%. And because non-interest notes and securities are structured in such a way that they are both asset-backed and they take into cognizance the reality of the economic environment. So if a transaction has been done, and is backed by, a purchase of a real asset that is Sharia compliant, the pricing on that instrument would be reflective of the economic realities. So if interest rates are, if lending rates in the banking sector has gone down from 23 or 22% to around 16, 17%, then, the pricing of those securities, have to reflect the economic realities where, the cost of lending has dropped. So in an inflationary environment, the answer to your question is that yes, non-interest instruments are still competitive because they are priced in accordance with market realities.
How can someone invest in Stanbic IBTC Imaan Fund, and what will be the returns and benefits?
Thank you very much. Stanbic IBTC Asset Management has 2 Sharia compliant funds right now. There is the Imaan Fund, which is an equity buyers fund, and there is the Shariah Compliant Fixed Income Fund, which is a fixed income, low risk fund. The Imaan Fund, which is the equity buyers fund, has been in issuance for several years now, and the performance has been very decent. If you look at over the last few years, the performance has been positive, and I think but also is also reflective overall of the performance of the equity market. So what we've seen is that 6 of the last 10 years the equity market has been negative. So the Imaan Fund invests in the equity market. So performance has been reflective of that. But in a year where the equity market delivers positive returns, you see a positive performance in the fund. But like I mentioned earlier, what we've seen is that investors generally, their appetite for investing in equities has declined significantly, which is why we launched the Sharia Compliant Fixed Income Fund. That has been tremendously successful. We launched it in Q4 last year at 1 billion. Today, a few months later, is over, or it's close to 4 billion. We've seen a 400% growth, and it's growing very, very rapidly. Within a very short period of time. There's been a lot of interest. We've seen hundreds and hundreds of investors in the fund. We think you'll grow into thousands. We had a non-interest banking window within the bank, which was closed. Now what we've seen is that all those clients are now moving into the Sharia Fixed Income Fund. So we've been able to provide a solution to address the non-interest banking window that was closed in the bank within the group, sometime in the past. So that we're open for business within the Stanbic IBTC group. We're very happy to deal with investors that have appetite for Sharia compliant and non-interest banking products. We're able to provide a solution to them through those 2 funds. Now, in terms of returns and benefits and how to invest. Now, in terms of the benefits have been, the benefit, it allows you to invest in accordance with your beliefs, in accordance with your religious, ethical beliefs, and very importantly as well, these funds are not just for Muslims. We have a lot of investors that are non-Muslims because, for example, the fund would not invest in companies that produce alcohol. There are a lot of pastors that don't drink, or there are a lot of people that don't believe in drinking alcoholic drinks, and is appropriate for investors that have that lineage. If a company takes debt over a certain level, if they are heavily leveraged, then the fund would not invest in those types of companies. And what you see is that if you meet all these criterias, then the companies that qualify are very solid companies. So you look at the likes of Nestle, the likes of MTN, Dangote Cement, so on and so forth. Big corporate companies that are blue chip companies that are doing very well. So it allows us to be able to cater to investors that both have an ethical lineage as well as have appetite to make very, very good returns. So if you want to invest, there is a form that is completed from our website, StanbicIBTC.com. You go to the asset management space and you download the form. Once you download the form, you fill in the application form, you put in your KYC requirements, which is know your customer requirements, and submit the forms to any of our 180 or so branches nationwide. Once you submit the forms to any of our 180 branches nationwide, you'd be advised of an e-account number within 24 hours. Once you're advised of that e-account number, you can then make transfer into that account. And I mean, it's as simple as ABC.
And lastly, the two federal governments, what can you say are the learning points from the two federal governments of Nigeria to Sukuk issued in 2017 and 2018? And the third one that is about to be issued this 2020, how can Nigeria benefit from it?
Thank you very much. That's a very good question. In terms of the learning points, I think that the offer was fully subscribed. The first one was issued
in terms of investor participation.
Yes, in terms of investor participation. The first one was issued at 16.47%. The second one was issued at about 15.7 or so percent. Now, the investors within the fund, have been very happy with the performance so far. They are asset linked, and their asset, they are backed by specific transactions. So there are some road projects, in the southwest, in the northeast, that the Sukuk money has used to construct those roads. So we want to encourage the government to issue more of these types of securities so that Nigerians can see where their money is going into, where their tax money is going into. If you're going on the Lagos-Ibadan Express Road and you see federal government Sukuk or Ijara note is being used to develop infrastructure, it gives you a high level of satisfaction. So I think the government has done it right. But one of the challenges is that more needs to be done. It's only a fraction of the total federal government issuance. So it's not as liquid as it should be. So the government needs to address that challenge by issuing more notes into the market and making it more tradable and more available to investors, pension funds, insurance companies, and high net worth individuals to come into the market and make the investment.
How can Nigerian benefit from this thought that about to be issued?
Okay, the third one, I think that is a good time to come to the market to issue. Like you alluded to earlier, rates in the market have come down significantly. CBN has precluded some large-scale investors from investing in OMO securities. There are LDR challenges in the banking sector. And I think that, these sorts of opportunities where the federal government issues a third Sukuk note, the timing is excellent. I think the demand will be huge. We are looking forward to it. We think that it will come out in the first week of March, from what we hear. Yes, first quarter, yes, of 2020, yes. So we're looking forward to the Sukuk note opening and us participating in the Sukuk note and bringing it to investors and Nigerians to be able to invest.
Thank you very much, sir, for your contribution.
Thank you very much, Bukola. It was a pleasure.
And that will be all for this edition on this program. You can send questions and comments to news@prosherng.com and reporter@prosherng.com. Also, you can engage us on our social media handles displaying on the screen. Many thanks for watching, and bye for now.